Hello everyone, welcome to Smart Investing. I'm very sorry yesterday evening you didn't have your daily market update. I'm currently on holiday with my daughter, so at the moment at my parents' place. And after that I go to the sea. I will be into a new Airbnb, so I'm very sorry if I don't stick to the usual schedule. So today's video I want to go through the key highlights of the Microsoft earnings that we had yesterday after the market close, and Meta earnings. As I told you on my last video, they would beat, no doubt that they would beat, and they beat, and the share price increased quite for a lot, and the overall market was lifted because of the earnings, and especially because also of the guidance. So we're going to have a look at the key numbers and why the earnings also today of Apple and Amazon will be also good. Maybe Apple, maybe less, but Amazon definitely, because it's in line with what Microsoft has actually announced for the cloud computing and online services businesses, like AI and stuff. Definitely they are not slowing down on the AI spending. They are actually accelerating the AI spending, and AI is definitely a long-term trend, and this is not the end of the Tesla play, I'll tell you. Sorry, the AI play. So without waiting, let's go straight into the key numbers. I'm using the AI actually to pull out all the key data and the key summaries, so then you can do that also at home. It's not very difficult. It can do everything you ask them to do. The most important is how you interpret the data and what you're going to do with those data. The same thing is that if I told you if the VIX is at the maximum, this is the time that you have to buy. If you do the opposite, you sell because you panic, then you know what you have to do, but you don't do it. So at some point we cannot do anything else. You get AI do anything, you get history tell you what you have to do, and then if you do exactly the opposite because your fear and your emotion is guiding your action, then there's not much you can do. But anyway, today the market is up. We're gonna have a look at that, but still first we start with the Microsoft and Meta earnings. Meta, the stock is up 5% today. Was much more actually when above the 200 moving average, which is a good sign, but we trace back just below the 200 moving average. But overall, good earnings, good stock reaction. The overall market just reacted extremely well to the earnings of Meta and Microsoft, and today we're going to get the earnings of Amazon and Apple, and probably the earnings will be good, at least for Amazon and Apple. I'm not so sure, because there will be the impact of tariff and also the China market. But let's see how it goes. But actually, I'm not worried too much for Amazon. If you look at Microsoft, the gap up is even better, close to 10%. At the opening of the market, we were about 10% up, almost close to the all-time high. And it just retraced back to 8.36%, but still very, very good upside for Microsoft. And if you actually sold at the lowest, then you sold at 344. Now it's 428. So it's about 20%, 25% increase from the bottom. So that's why you should never panic sell, especially for this very strong company. The AI trend is not over. All the digitalization is not over. This is just started. We'll continue strong and strong and strong and strong. Cloud computing, huge business. There will be more and more and more cloud services need. There will be more and more data services need. There will be more and more artificial intelligence need. There will be more and more data center need. There will be more and more microchip need over the long term, over the future. But these are no-brainer deal. Despite the volatility, there is no doubt what this trend will be. I don't know how to tell you. Okay, let's go straight now to the key highlights. So Microsoft fiscal Q4 2024. The headlines, of course, is a revenue 64.7 billion. For Microsoft, it's a 15% year-over-year increase just on revenue. Just imagine a mammoth company like Microsoft still growing on top line 15% year-over-year. This is just incredible. Net income 10% year-over-year, 22 billion. You do a 64 billion revenue, you have a 22 billion net income. You imagine the margin you have for this type of company? Or do you want not to trust to invest in this type of company? This is impossible for me, Impossible. Free cash flow, 20 billion. Actually, the free cash flow is less compared to last year. It's 5% less. But if you look at the free cash flow of 20 billion, it's almost the same level of net income. Do you believe that? The net income is almost the same as the free cash flow. This is crazy, Operating income, 27.9 billion, is a 15% year-over-year increase. And Microsoft, of course, cloud revenue is 36.8 billion, which is 21% year-over-year. And that's probably the most important number that the market has actually looked for, and what actually is warranting the increase of close to 10% for Microsoft today. Just imagine. Net income is 22 billion, but you have 36.8 billion revenue out of 64 billion revenue. It's only for cloud services revenue. What can I tell you? Segment performance, intelligent cloud, 28.5 billion. It's an increase of 19% year over year, driven by Azure and other cloud services revenue growth of 29%. And we talk about giant, one of the mega cap company of the world, still growing some segment business over 20%, 29%. I mean, this is just unbelievable data, you know. Productivity and business process 20 billion plus 11% year over year. With Office 365 commercial revenue growth 13%. And Office 365 is the cash cow of Microsoft, you know, still growing 13% every year, you know. I mean, that's amazing, you know. Personal computing 15.9 billion is a 14% growth year over year, including a 61% increase in Xbox content and service revenue. So basically, Microsoft is all good all over the balance sheet and revenue and income statement, you know. What can you say? You know, key takeaway is a strong growth across all segments. There's no one segment that is not growing in Microsoft, you know, particularly in cloud services and gaming. Continued investment in AI and cloud infrastructure. Of course, this is the future, so they will not slow down on spending on AI and cloud services, you know. Free cash flow decreased slightly due to increased capital expenditure. Of course, you get less free cash flow because free cash flow, you get, if you know your table of free cash flow, you get operating cash flow, investing cash flow, and you have financing cash flow. If you are having a lot of capex due to your investment in AI and cloud infrastructure, of course, your free cash flow will decrease. But it's not a bad thing. You want to reinvest your free cash flow into your fast-growing business segment, you know, and this is what they do. So overall, to me, Microsoft is definitely a A+. So now, if you look at Microsoft, you want to see the table revenue. It was 64.7 billion as opposed to last year 56.2 billion. Net income 22 billion. Last year 20 billion. Earning per share 2.95 today. Last year the same quarter you get $2.68 per share. Free cash flow 20 billion as opposed to 21 billion, but of course you get more capex. Operating income 27.9 billion as opposed to 24.2 billion. Overall, excellent. So definitely Microsoft, even today after a 10% increase, is a buy, big buy. Is a A+ balance sheet, A+ income statement, A+ earning. You know, this company will not be so much impacted by all the tariff talk and so on. You know, the most of the service is definitely online, you know. So now let's go to Meta. Strong earnings the same, you know. Q1 25. Revenue 42.31 billion. It's an increase of 16% year over year. Net income 16.64 billion. An increase of 35% year over year. So your revenue increased by 16% year over year, but your net income increased by 35%, which means that all your cost and your margin went up to generate a bigger net income of 35% over last year. 35% for a mega cap company like Meta. This is definitely a cash flow machine, you know. Earning per share $6.41 is a 37% increase year over year. 37% year over year. Can you believe that? Free cash flow 10.3 billion. Operating income 17.6 billion, 27% increase year over year. Advertising revenue 41 billion. Almost all the revenues from advertising, 16% growth year over year. Actually, Meta, with all its infrastructure of company, like all the social media company they have, all the revenue they generate is purely on advertising revenue. 16% year over year. That means whatever happened in the market, whatever happened in the economy, they will still generate a lot of advertising revenue. Double-digit growth, high double-digit growth, you know, we are 16% year over year. Key metrics, ad impression plus 5% year over year. Average price per head 10% year over year. Meta AI monthly active user plus or minus 1 billion. Or do you want to replace Meta economic mode? You cannot replace Meta economic mode. Who can do better than Meta online on social media? They are just the giant monopolistic type of social media company, you know. Fred monthly active user 350 million. Capital expenditure forecast for 2025 64 to 70 billion. They will invest mostly into the AI infrastructure and the online infrastructure and everything that is around AI. Key takeaway, of course, for Meta, robust growth, advertising revenue supported by AI-driven tool. So those who are saying all these AI investments are not paying off, please wake up, they are paying off. What are you talking about, you know? And this is just starting. Significant investment in AI infrastructure and application, of course. Every billion they are going to invest. For 2025, 64 billion, 72 billion. They will get ahead of every other competitors that want to compete because they are investing massively into AI infrastructure. Strong user growth across platform with Meta AI reaching nearly 1 billion monthly active user. Or do you want to compete against company who have 1 billion active user on the platform. This is crazy. Crazy, crazy, crazy. Again, you get a nice table here on the metrics. No need to repeat what we said, but basically just amazing, amazing numbers, you know. Beat by 37% on EPS, beat by 16% of revenue over last year. So overall, A+ also for Meta, and I'm not very surprised that you get such a good and very high reaction from the market. And what I'm going to do right now is I'm going to sell a put on Microsoft and Meta. That's going to be an exposure of about $100,000. But what risk do I take? Even if I got exercise to get a $100,000 investment on Meta and Microsoft, it's a safe investment. Safe investment. But I'm sure I'm not gonna be triggered. I will just sell my put at around the price they just started before the earnings. And that's it. Even if they retrace back a bit to the price before earnings, then thanks so much, you know. If you miss that gap up, you know, you sell a put at 400. Then if it goes back to 400, you buy the stock 400. You see, as opposed to today at 428. So you is a win-win situation. You cash the premium, which is very high, because we are talking about $40,000 contract value. And for Meta, we're talking about $57,700 contract value, which means you're gonna make money, you know. You're gonna make money selling put for these companies. For Meta, I'm gonna sell a put at around 500, 550. Yeah, 550 is good. And for Microsoft, I'm gonna sell 400. And if you want to know how much I'm gonna make, because I do 1 month only, 1 month put option sell, I'm gonna tell you how much I make. And I will make it in 5 minutes. 5 minutes job. I log in. That's it. Let's go. I will make few $1,000s just in 1 month, just by selling put on these companies. Meta. That's it. Meta, we said we're gonna place the strike of the put at 550. 550. Okay. Let's go to volatility and Greeks, option value over 1 month. So we are the 2nd of May. So I would say 2nd of June. I will take the 6th of June because it's about 36 days to expiry. I'm going to sell at 550. 550. You see, it's a contract value of $55,000. I will get $1,500. $1,500 for 1 month's contract of 55,000 for Meta. Okay, and my delta is about 31%, which means that I have 31% probability is gonna be triggered and 70% chance of success. So your probability is for you, and you cash $1,500. And if it goes back to 550, is the price just before the earnings. You see the earnings fantastic, so you get a second chance to buy for the price before earnings. If it goes back to that level again, I doubt it, you know, but sometimes it just gap down, and if it gap down, then you make money by buying the price before earnings. It's fantastic, you know. So that's already 1,500 that I will make. And Microsoft, let's have a look. Microsoft, we say 400. Okay, 400. Same 36 DTE. I'm gonna make much less because Microsoft is less volatile. So it's a delta of 18%, which is 80% probability of winning your trade, actually not being exercised. And you will get $400. It's 1% premium. But of course, you are at 20 delta, you know, for a very low volatile stock, you know, because volatility is about 24, 25%. It's not very volatile, you know. That's why you don't have so much big premium. But overall, for Microsoft and Meta, for absolutely, and I insist, absolutely no risk, because we had the earnings, excellent earnings. So there is nothing that should warrant a crash of these stocks after such excellent earnings and growth. So that means I make $2,000 right now. By market close, I'm going to sell these puts and I will make $2,000, you know. That's it. Easy. So other than that, I'm going to have a look at the market overall because I'm not going to do a market close today. But I think it's good that we are waiting tomorrow to make a market update because we'll have the earnings of Amazon and we'll have the earnings of Apple. So better we wait the earnings and just make a overall market update of what really matters. And what really matters today is Amazon and Apple earnings. Amazon is up today just before earning release. And Apple is flat today just before earning release. But Apple has already really rallied a lot from 170 to 212 from the lows. So overall, the market is up today, like I told you. QQQ, almost 2% increase. So now we are about 21% from the bottom, and we are close to the all-time high, you know, close to all-time high. We are just 10% to the all-time high, you know. So those who were just shouting doom and gloom, that's over, the US market is over, the equity market over, is dead, no safety, no safe haven, all these crap companies are just worth nothing. I mean, don't listen to all these people, you know, they don't understand what they're talking about. Now, you get a S&P 500, same, up 124%, also hugely recovered from the bottom, and very close to all-time high, you know. We are 561, all-time high 613, you know. That means we are just also 8% from all-time high. We're going to go to all-time high very soon. After earnings, next quarter, go to all-time high. Definitely go there. Unless, of course, there is a major event we didn't expect, but that's life, you know. Life is full of things that we don't expect and happen. You should always be ready for the unexpected. But it's very rare that you get a 20, 25%, 30% decrease, then a sharp recover, and after that again it goes and crash again. I didn't see that since the dot-com bubble, you know. Since over the last 20 years, it didn't happen. So if it happened, it's just no luck, you know, that's it. But you have to trust the process, and you have to trust history, and then history is teaching you a lot of good things. So if you go now to IWM, that's the most frustrating bit. It's Y96 up less than 1%. And I told you the key resistance for IWM is definitely the bar of 200. 200, if it break again 200, then we go back to all-time high. But 200 is a key resistance level for IWM. But definitely when geopolitics will start to decrease weight, because there is now we're going to see on the economic data, the economy just protracted a bit this quarter. Then if there is a second quarter protraction of quarterly GDP, then we are officially in a recession. Then after that, geopolitics will have a lot of pressure to start to decrease rates, you know. To me, my opinion, it should already decrease weight. Already 1 quarter GDP contraction is enough to start to decrease weight. AMD almost back to 100. Palantir almost back to all-time high. And you think the market is bearish and not good, you can Palantir go back to all-time high with insane valuation. SMCI just gap down yesterday to 30, already 33, already recovered half of the gap down. So that's why don't follow this movement, you know. Let the stock do its thing, and that's it, you know. SMCI, what do you want to sell this company? Already such a low valuation, you know. Let's wait the earnings. Let's say if they're going to stick to the 40 billion sales revenue estimate for 2026. Let's see if they're going to stick to the same narrative as they said last time. Okay, that's going to be a test. But they said that the revenue estimate, because they had like a pre-earning release, you know, they're already telling what's going to happen. So what you're going to see today is not when they're going to release, the stock is not going to move down, because the downside has already been done. The numbers are already outside there. What they're going to say is they're going to listen to the guidance to see exactly what the company expects for the next quarters, but also for 2026. And if they stick to their guns, you know, if they do, the stock will rally. I have no doubt about this. Bitcoin 3% up today, excellent. The dollar is up today, but not so much. And if you look at the VIX, also we said already down. And if you look at MSFT, we said already is up close to 4% today. So overall, excellent day, you know, excellent. Since the day the VIX went to 60, I keep telling you, don't move, just hold on. Look where we are today. Congratulations for those who actually hold really firm with the investment and don't panic sell, you know. IMS against up. We traced back a bit yesterday and still up today another 8%. Will not go back. And I sold the put, I told you, sold put on 27. I make easy money. Few $1,000s every month, no problem, you know. Few $1,000s every month, no problem. Doing absolutely nothing, just selling call options or put options, you know. Just easy money. Okay, let's go now to the economic data. Today there must be some economic data news. Yesterday we had the PCE, of course, and core GDP. GDP quarter over quarter is minus 2.5%. It's definitely the first time the GDP contract. If you look at the chart here, you see the chart. The first time the economy contract by 2.5%, and that's where actually Jerome Powell should start to decrease rate. Definitely. Then PCE is 3.6% quarter over quarter, and core PCE is 0%. Core PCE price index year over year 2.6%, and month over month 0%. So definitely there is no inflation in the economy. No inflation in the economy. GDP contraction. Still earnings are doing really, really well, and the market keep recovering. So that's been, the market is looking past the GDP contraction. The market is looking past the GDP contraction. For those who wonder, hey, how come the market recover and don't collapse after GDP contraction? No, they already priced in a small recession. They already priced in a small recession. Now we are looking forward after the contraction, you know. The market is a forward-looking machine. You see contraction of GDP today, but they already priced it when it was minus 25%, minus 30% for Max 7. You know what I mean? And they see there is no recession in earnings, no recession in the balance sheet, no recession in income statement of this company. So why do you want the market to fall back again? No, no inflation in the economy, 2.60%. Let's look at the data of today. Initial jobless claim. Job cut. 2 times less than prior, only 100,000. Continuous jobless claim. 1.916 million. Forecast 1.86. So slightly above expectation. But jobless claim, slightly above expectation also, 241%. So definitely there is room to decrease rate. The job market is starting to see a small tick into jobless claim, into initial jobless claim, into unemployment. And you see there is no inflation, there is a GDP contraction. So what else? What else? Jerome Powell is waiting to decrease rate or start to decrease rate again. The interest rate definitely is too high for the economy. S&P Global Manufacturing PMI 50. So definitely we are not so bad. ISM Manufacturing PMI 48.7. Yes, of course, we are into contraction mode. Tomorrow we will have government payroll, manufacturing payroll, non-farm payroll, participation rate, unemployment rate. Let's see if there is an uptick on unemployment rate. But if there is an uptick on unemployment rate, then definitely Jerome Powell should decrease the Fed rate, you know. I don't understand why they don't do it. Let's look at the headline to close the market update of yesterday and today. I did it a bit longer today because I didn't do it yesterday evening. Okay, market specific. US stock rise on tech earning, dollar gain. Of course, when you see such stellar earnings, of course the market rally. And of course the Trump admin is putting pressure for the Fed to decrease rate. And whether you like the Trump government or not, it doesn't matter. I think there is enough room to decrease rate today in the US economy. Enough room. Tamed inflation. GDP contraction, slightly deteriorating job market. What are you waiting for? What are you waiting for? Otherwise, you see all the headlines for tariff is gone. That's it, you know. The market today, Nasdaq, especially the Nasdaq 2.2% today. So that's it, you know. Overall, good earnings, good market reaction, good upside. I mean, what else do you want? This will continue, you know. It will continue. It will go up and up and up from here. Stay invested in technology, AI-related stock, cloud computing, robotic, chip sector, you know, because the future is that everything that we will need, everything that we will build will need chips. You don't know which chip company to buy. Buy the SOX ETF. Or buy the VanEck ETF if you don't want the SOX. But invest in a basket of the best chip company in the world if you don't know which one to invest. Me, I invest in both in the SOX and on AMD because I think AMD has a lot of upside potential compared to NVIDIA. Although I think NVIDIA is a fantastic company, but it will not do 10 times again, which I think AMD will do. But if you don't want to follow on the company specific risk, then invest in the diversified ETF like a SOX. You will not get maybe 10 times, maybe you get 2 times, 3 times. Still good, no? Why you don't want 2 times, 3 times? Anyway, thanks so much for listening. And we will see what the market will give and deliver on Amazon and Apple today earnings. Apple, don't expect too much, you know. But the market already expect that it's not gonna be a stellar earning. But if it is, then it's gonna rocket like hell, you know. It's gonna rocket like hell if it is, no. Okay, please subscribe, like, and leave a comment. Thanks so much. Bye. See you next time.